All right, here's your practice exercise to make sure you understand those business formations. We covered the three basic types, sole proprietorship, partnership, and corporation. Practicing is so important for your learning, for your retention. So if you haven't had a chance, go ahead, pause the video and try these really quick and then unpause to compare and see how you did. All right. A business with two owners and a limited life. So you're looking for key words here, right? If it's two owners, we know it can't be a sole proprietorship. It's either going to be a partnership or a corporation. So now we're looking at this other clue, a limited life. We know a corporation has a continuous or unlimited life. That means this has to be a partnership for number one. Number two, a business with three owners and unlimited liability. So here can't be a sole proprietorship because it has more than one owner. Could be a partnership or corporation. It has unlimited liability, meaning personal risk for the owner. And if it's got personal risk, then it can't be a corporation. It must be a partnership again. Sometimes students get confused at that one because they think a partnership can just be two people, but no, it's two or more. You could have 100 partners, 500 partners, okay? The key there is unlimited liability. Unlimited liability exists for a sole proprietorship and a partnership, at least the type of partnership we talk about in this class. We know it can't be a sole proprietorship because it has more than one owner, so that leaves partnership. All right, number three, a business with one owner. So that rules out a partnership, but it could be a sole proprietorship or a corporation. This entity is separately taxed. So the only business formation that creates a separate entity is a corporation. So don't get confused by that one because of the one owner. One owner means it could be sole or corporation. Then you're going to have to look at an additional clue. It's taxed separately. The only one that does that is a corporation. Number four, a business with one owner, so it could be sole or corporate, and a limited life. Well, we said a business has an unlimited or continuous life, so this must be the sole proprietorship. Number five, a business has 100 owners, so we know it can't be the sole proprietorship, and a limited life. Can't be a corporation then, because corporations, like we said, have an unlimited or continuous life. So number five must be a partnership. Number six, a business with one owner. So it could be either sole or corporation, and limited liability, meaning it restricts the amount of personal risk that the owner has. And the only one that does that we're covering is a corporation. Okay, so that was the first part. If you've had a chance to go through the second part, we'll compare. If you haven't, pause and give it a try really quick. We're going to list at least one advantage for each of the following forms. For sole proprietorship, I'd say the main advantage is it's easy to start. Okay, you may have picked a different one, but that's definitely the main one. It's just so easy to start. A partnership, probably the main advantage there that I could think of is that you have greater resources. Even if just the resources is manpower, right? If you're partnering up with someone, you have their time, you have their labor, you have their expertise, their knowledge, their connections. So that seems to be the greatest advantage of that partnership. You might also say it's relatively easy to start. There's no business tax. So you may have said some of those other advantages we talked about. A corporation, I think the greatest advantage here is that limited risk to owners. Opportunity for growth is another one. Right, because you can raise large amounts of capital. So that's a good way to structure yourself for growth. What else can you say? That continuous life is also an advantage. So you could have mentioned any of those. Okay, I just tend to say the one that first pops into my head. Now let's list a disadvantage of each of those business structures. And again, if you haven't tried this, pause and give it a quick try. All right, so now let's look at what you may have said for the disadvantages. So for sole proprietorship, a disadvantage, it could be that risk, right? You have what's called unlimited personal risk. Unlimited personal risk. Okay, so if you have a customer, they're not happy, they sue, they're going to sue for the assets of the business, and then your personal assets are also at risk. You might also have said the fact that it's a limited life. Limited life. It's harder to raise capital, harder to get the money. Okay, so these are all examples of ones you could have said for the disadvantage. You just had to put one. Partnership, still the risk, because we talk about the general form of a partnership, which means at least one partner has unlimited risk. Unlimited personal risk for one partner. They're called the general partner. For the general partner. Like, why would anyone be the general partner? Usually because they get a higher profit sharing ratio because they're taking more risk. You might also have said the limited life, having to work with others, right? You got to work with your partners. And if you have a disagreement, many a partnership has ended that way. Corporation, a disadvantage. You may have heard that term double taxation, right? Because we said that a corporation is a separate entity, so it pays the corporate tax on business income. And then when that business income is distributed to the owner, it's taxed again at the personal rate, taxed at personal rate. And so that's why there's that term double taxation. That same stream of income is getting taxed twice, once at the corporate level and once at the personal or individual level. So double taxation is a risk. You kind of have a loss of control, right? If you're selling off ownership to raise capital, you're going to lose some of that ownership or control. It's also costly to start. You might have said that too, right? Lots of regulation as well that you have to comply with annually. Woo, lots of good advantages and disadvantages. Hopefully you did well.